Few questions. 1, your 30-day market outlook. 2, how will the market respond to the next Fed meeting? 3, if we needed to liquidate all our positions quickly in order to get into cash to offer redemptions without taking losses, how would we do it?
Let's talk about finance lessons from the 12th episode of Billion Season 2, based on my work experience at Goldman Sachs in New York City, and based on my experience working at the top hedge funds in the world. Now, please like, comment, and subscribe, and stick around because at the end of this video, I'm going to grade the episode for Wall Street Realism with a buy, hold, or sell rating. In this video, we will discuss 3 topics. The first topic is, how can we find out what stocks the smartest investors own? In this episode, Bobby is about to get arrested, and he wants to sell his stocks before the market finds out what stocks he owns. And I'll teach you in this video how to find out what stocks Warren Buffett and the large hedge funds and mutual funds own by analyzing what are called 13 Fs.
What you were asking about was how to protect the portfolio in the worst case scenario before word leaks on the street.
When that happens, everyone will look at our most recent 13F and start shooting against our liquid names.
And the only way to beat them to it is to have sold first.
In topic 2 of 3, we will discuss how hedge funds use artificial intelligence, program trading, and high-frequency trading, which is a subset of what is called algorithmic trading, all of which I'll explain from scratch in this video.
So, what do you have for me?
I take over the program trading desk and export our holdings. I load up the whole program and then import them into the trading system. I'll create a phantom algo for our biggest illiquid names to protect against the high-frequency guys.
In topic 3 of 3, we'll discuss insider trading and market manipulation, and how you can avoid getting into trouble if you hear insider information on a stock, and how we can be mindful of what not to post on amazing online forums like Reddit. In this episode, Axe gets arrested for market manipulation and other reasons at the 9/11 memorial.
Robert Axelrod, you're under arrest. Let's go, bud. Let's go.
Topic 1. How do you find out what stocks investors like Warren Buffett own? Well, by law, if you manage more than $100 million in a hedge fund or a mutual fund, you have to disclose this every 3 months on SEC.gov in what is called a 13F filing. Now, let's see what Warren Buffett owns. So step 1 is let's go together to SEC.gov and let's type the name of Buffett's fund, which is called Berkshire Hathaway. Step 2, select View Filings. And then in step 3, let's search for the most recent 13F-HR, which is Buffett's holdings as of the quarter ended March 31st, 2024. And then let's click this filing rectangle right here. Now, let's click the information table here. And here we see the stocks that Buffett owns, including Amazon, American Express, and Apple. Now, what we want to do is we want to see if he's added any new stocks or sold shares in stocks in the March quarter. Now, there are websites that summarize this data, but quite often they're wrong, so always do the analysis yourself. So let's quickly copy all this data and paste it into Microsoft Word. Then let's go to SEC.gov and let's get Buffett's holdings as of the previous quarter, which is Q4 of 2023. Then let's copy this as well and paste special into a new Word document. Now let's use the compare feature in Microsoft Word to see what new stocks have been added or removed when we compare Q1 of 2024 versus Q4 of 2023. Now, just for now, please ignore the numbers and just focus on the names. And we see that he has a new position in Chubb and he exited a position here in Hewlett Packard. Now, what I just showed you is what professional investors do when analyzing the Federal Reserve meeting minutes to see if the language has changed in terms of interest rate hikes. For example, if in the last FOMC, meaning federal meeting, they said that they're somewhat worried about inflation, and the new version or latest minutes changed the word somewhat to extremely worried, then this implies that the Fed will be more aggressive in raising rates. And investors use this auto-compare feature with annual reports as well to see what new risks have been added or removed. Now, you might be thinking, why not just use ChatGPT or Gemini or Bing Chat or Claude.ai? Not yet, because it's not 100% accurate. Now, if you want to learn how to use all AI products to help you with general investment research, please see this link here, which is in the description of this video for my AI investing course. Let's get back to Warren Buffett's stocks. Now, you might be wondering if Buffett bought more shares or sold shares in any of his existing investments in Q1. Here's how we figure this out. In Excel, let's paste the data for Q4, not including Chubb, and for Q1, not including HP. Let's now create a pivot table for Q1 so we can look at a summary of how many shares Buffett owns as of March 31st, 2024. And let's do the exact same thing for Q4, meaning the number of shares he owns in each stock as of December 31st, 2023. Now let's quickly insert a tab to see what has changed. And we see here that he sold 13% of his position in Apple, and he sold 88% of his position in Paramount Global, amongst other changes here. Now, if we look at the stock for Paramount Global, we see here that one of the reasons it's massively underperformed this year is because of massive selling by Warren Buffett's fund. Now, since Buffett has a large fund, if we notice that there is a material decrease in the number of shares, then this could imply that he is unwinding his position. And therefore, these could be short candidates and vice versa after you've done your thorough investment research, of course. Now, it can take a long time for large funds to sell shares. Now, sophisticated hedge funds can also use options to offset losses when selling a position, like what we discussed in the second half of this episode here. And the link is in the description. Now, a simple example of using options is, let's say I own a lot of shares in Coca-Cola, ticker KO, and I need to sell the shares, but if I do it, it might drag down the stock. So what I can do to protect my position in Coke is I can buy an insurance product called a put. Now, if Coke's stock goes down, then the put position goes up in price. And if Coke's stock goes up in price, then all I lose is what I paid for the put right here. Now, options can get quite complicated, and for more details on how to use 35 different option strategies, please see the link in the description to my options course, which is also included for free in my MBA programs. Separately, a lot of hedge funds went belly up in the fall of 2008 because they owned stocks that were really illiquid, meaning they didn't trade very much. So when these hedge funds had to sell these stocks because of fund redemptions, this pulled down the value of the stocks. Now, the risk with Axe Capital in this episode is that he wants to liquidate his fund quickly before the market finds out that he's doing so. And this can be really difficult to do if he owns shares in stocks that don't trade that much, meaning illiquid stocks. What should Axe do?
And I'll use 6 different brokers with 6 different baskets, $1 billion each: currency, tech, big pharma, etc.
Now, one of the strategies Axe uses is to sell using 6 different brokers, so it's less likely that the street knows that they are liquidating the portfolio. Topic 2 of 3. How do hedge funds use artificial intelligence, program trading, and high-frequency trading, which is a subset of what is called algorithmic trading?
So, what do you have for me?
I take over the program trading desk and export our holdings. I load up the whole program and then import them into the trading system. I'll create a phantom algo for our biggest illiquid names to protect against the high-frequency guys.
Now, program trading is when a computer buys or sells shares using predefined parameters. For example, selling shares at a certain limit price, or at certain times, or through different brokers. And program trading is often used so that we don't sell all our shares at the same time, which can push down the price of stocks. So programs will sell a smaller amount at different time intervals. And some people estimate that 80% of all trades are done using program trading, which is up from about 50% last decade. And this makes sense partially because more investors are transacting in ETFs like the VU, which mirrors the stocks in the S&P 500. Now, if an ETF fund gets inflows or outflows of capital, it's so much easier for them to use program trading to buy or sell stocks in the S&P 500. And part of program trading is trading algorithms, and more investors are using artificial intelligence now to transact in stocks. And the best example of this is Renaissance Technologies, which was founded by the brilliant late mathematician Jim Simmons. Now, Simmons founded Renaissance in the 1980s after he left the NSA. And this is unbelievable, but Renaissance's returns have been between 60 and 70% on average every single year since the 1980s. Now, nobody knows exactly how Renaissance does this, but they only hire mathematicians. And their AI algorithms might include the following simplistic example. If it rains a lot, then short restaurant stocks, because people don't go out to restaurants as often when it rains. And by using program trading, we can reduce human fat finger errors, which means someone accidentally added too many zeros when buying or selling shares, which has bankrupted many companies or resulted in employees being promoted to managing director. Now, another type of algorithmic trading is called high-frequency trading, which means rapid buying and selling of shares. And an example of this might be with SAP, which is a German software company that's listed on the US and the German markets. If SAP listed in the United States is priced too high compared to SAP on the German market, then high-frequency trading might go long the German SAP shares and go short the American SAP shares. And high-frequency traders rarely own stocks when the market is closed. High-frequency trading is very controversial too because it often leads to increased volatility in stocks. And an example of this was on May 6 of 2010. It led to what is called the flash crash, where the markets temporarily fell close to 10%. And this was partially caused by one trader who got into trouble for creating a spoofing algorithm. Now, Taylor told Axe that they will create a phantom algorithm to protect against the high-frequency guys. Now, we don't know exactly what this means, but it could imply using an algorithm to make it look like Axe Capital is not selling many shares in specific stocks. Topic 3 of 3, insider trading and market manipulation, and how you can avoid getting into trouble if you hear insider information on a stock, and how you can be mindful of what not to post on amazing online forums like Reddit. Now, Axe finally gets arrested in this episode.
I need to know what is going to happen to me when I get arrested. Minute by minute.
I could tell you it's no big deal, but I'm not in the lying to you game.
Now, in this episode, Axe gets arrested at the 9/11 memorial, which is not accurate. And I know several people that have been arrested. And what happens is the FBI often arrests you early in the morning at your house. Now, I pride myself on being very ethical, and I've never done anything wrong when it comes to any security law. But my friends have gotten into trouble. And when this happens, nobody talks to you, but I do, as I love helping people. Now, a friend of mine at a hedge fund got arrested for insider trading. And he told me that dozens of FBI agents entered his house early one morning with flashlights and these things here. And they pointed them, the FBI agents, all over the house, including in the baby's crib. Unnecessary and ridiculous, I know. He was then handcuffed and taken out the front door so that all his neighbors could see the many FBI agents with their FBI jackets taking him away. He then had to pay a fortune to pay for lawyers, and he ended up serving just under 3 years in the Taft Correctional Facility in Southern California, which is about a 5-hour drive of south from where I live here in the Bay Area. And I went to visit him multiple times because nobody else would. The Taft Correctional Facility looks like this here. It's closed now, but it looks like a low-end Ramada hotel with minimal security. And every time I sent him an email, I would have to pay a fee, which is totally unfair. So what is insider information, and how can you avoid getting in trouble for it? Well, if you hear any information about a stock that is not publicly disclosed on SEC.gov or through a public forum like a webcast, and you transact on this, or if you tell anyone that transacts on this, then you can go to jail. And if you work at an investment firm and you hear something, then you immediately have to tell your compliance director and your boss so that the stock can be put on what's called the restricted list, which means nobody in the firm can transact on that stock for a while, usually until after earnings have been released. And if your boss refuses to put the stock on the restricted list, then quit immediately. Now, what happens in some hedge funds, but not many, is that in some hedge funds, the boss will transact in the stock and the analysts will get in trouble, but not the boss. And I don't want you to be this sacrificial pawn, so always put your family first. Separately, stock market manipulation is against the law. Now, if you make a stock go up or down a lot in a short period of time, you can get into trouble for this. Now, I love the Reddit crowd, but please be careful and focus on long-term investing. And if you think there is a tiny chance that posting something online might get you in trouble from a stock manipulation perspective, then please don't do it. And I say that with love in my heart as always. Also, if you read something online that you think might be insider information, please don't transact on it. And I think that the SEC might one day go after online retail investors. So please be careful. And again, I say this with love in my heart as always. Now, what advice did Dollar Bill give to Axe?
There's always at least one guard who wants to get paid. Find that and pay him.
Now, this is unfortunately accurate. For example, when Raj Rotman went to jail for insider trading, he actually bribed a prison official. Let's talk about grading this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did a superb job of explaining strategies for selling positions before they are publicly disclosed to the marketplace, by selling through many different brokers, and by using program trading. However, when people get arrested in the hedge fund industry, it is mainly done at their home first thing in the morning and occasionally at the office. As a result, I'm going to give this episode a hold rating. Please subscribe, and I will see you soon in our next reaction video when we react to Season 3, Episode 1. Thank you.